Welcome to Smart Wealth with Joshua.
Your daily stock analysis and catalyst talk. Today we're taking a look at Micron Technology.
And if you find our talks useful, please do consider, subscribing, liking, and commenting underneath. We read every single one, and it really does help the channel.
It does.
Okay, so let's dive in. We are tackling a company that I think for the longest time, most investors kind of put in the boring bucket.
Oh, absolutely. The classic cyclical.
Exactly. You buy it, you hold it, it goes up and down with the economy, a commodity. But looking at the research you brought today, it feels like we're looking at a totally different animal.
That's a great way to put it.
It feels like this company has suddenly become the absolute bottleneck for the entire AI revolution.
That is exactly right. And bottleneck is the perfect word to start with. We have to stop thinking about Micron as just, the company that sells memory for your PC. The data we have suggests a complete identity shift. They're moving from being that cyclical stock, where the old rule was you buy the bust and sell the boom, to a secular growth stock. And the numbers, they're just staggering.
I was just looking at the earnings report you shared. This is for fiscal Q1 2026. And yeah, staggering is the word. They reported revenue of what? Around $13.6 billion?
$13.6 billion. That's a 57% jump year over year.
57%?
Just think about that. For a mature hardware company to grow its top line by almost 60% in 1 year is, well, it's almost unheard of.
Yeah.
But that headline number, that's just the appetizer. The real story here, the real hook, is a specific type of chip called high bandwidth memory, HBM.
Right, okay, so these are the chips that physically sit right next to the GPUs, correct? They're the ones that let the AI think fast enough.
Precisely. Think of an NVIDIA GPU like a Ferrari engine. It's incredibly powerful. Yeah. But if you try to feed that engine fuel through a tiny garden hose, it just stalls out. It's a bottleneck.
You need a fire hose.
You need a fire hose. That is HBM. You can't run a high-end AI accelerator without it. And here's the wow factor that just jumped out at me from the material. Micron's HBM supply is completely sold out.
Wait. When you say sold out, do you mean for this quarter or for the year?
They are sold out through 2027.
Wow.
The order book is closed.
That's incredible visibility. Usually in the memory business, you're guessing what demand looks like 6 months from now.
You're lucky if you get 6 months.
But you're saying they have orders locked in for 2 full years.
2 full years of sold out inventory. And this is why we're using the term supercycle. The skeptics will say, oh, this is just a short-term spike. It's a bubble.
Of course.
But the HBM market alone is projected to grow into a $100 billion market by 2028. We're talking about a compound annual growth rate of 40%. That is not a blip. It's a structural shift.
Okay, let's unpack that supercycle idea, because you're right. That's where the skepticism comes from. We've seen memory cycles before. It's famous for boom and bust.
The hog cycle.
Yeah, exactly. Prices go up, everyone builds new factories, they flood the market, and prices crash. So why is this time different? Is it just the HBM chips?
That's the main driver, yes, but the growth is surprisingly broad. Looking at the revenue breakdown, sure, cloud memory revenue, that's the AI demand, was up nearly 100% year over year.
Doubling in a year.
Doubling. But, and this is so important for the secular growth case, the mobile and client segments were also up over 60%.
So it's not just data centers. We're talking phones and laptops, too.
Exactly. We are entering the era of edge AI.
Which means the AI is actually living on my device, not just in the cloud somewhere.
Right. If you want your phone to run a complex model without a server connection, that phone needs way more memory and faster memory. So you have this huge engine in the cloud with HBM and a tailwind in consumer devices. It's a dual-engine growth story.
Okay, that covers the revenue side, but let's talk profit, because revenue is vanity, profit is sanity, right? Building these chips has to be expensive. What do their earnings look like?
It's explosive. For Q1, their earnings per share, their EPS, came in at about $4.78.
Okay.
To give you some context, that beat the consensus estimate by over $1. On Wall Street, beating by a few cents is a beat. Beating by $1 is a statement. It means the analyst models were fundamentally broken.
And what about looking forward? Because stocks are priced on what's next.
And this is where it gets really interesting. For the full fiscal year 2026, analysts are now projecting that EPS could hit nearly $33.
Wait, $33 a share? From just under $5, that implies a massive ramp up.
Nearly 300% growth. And when you see earnings power like that, the entire market has to reevaluate what the stock is worth. The engine behind that isn't just volume, it's margin expansion.
Meaning they're keeping more profit from every single chip they sell.
Precisely. In that cloud memory segment we talked about, gross margins expanded from 51% to 66%.
66%. I'm sorry, that sounds more like a software company than a hardware company.
It really does. And that tells us the customers, the big hyperscalers, your Microsofts, your Googles, they are willing to pay a premium. They are fighting for allocation, not negotiating for pennies. When you're the only one with water in the desert, you set the price.
That margin is incredible. But let's check the balance sheet. Building all these factories takes cash. Are they burning through it all to keep up?
Actually, it's the opposite. I'd call it a fortress balance sheet. In just one quarter, Micron generated a record $3.9 billion in free cash flow.
Wow.
That's cash left over after paying for everything. So they're funding this huge expansion out of their own pocket and still generating a surplus.
And speaking of expansion, we have to talk about the moat. What stops competitors like Samsung or SK Hynix from just flooding the market and crashing prices?
There are really two moats here, technology and geopolitics. On the tech side, their chips are proving to be more power efficient, which is a huge deal in data centers. But the geopolitical moat is fascinating. We call it the U.S. advantage.
Because they're the only US-based manufacturer of this kind of memory.
Exactly. And in today's world, that matters to the tune of $6.4 billion. That's how much they've secured in CTPS Act grants for their new fabs in New York, Idaho, and Virginia.
So the government is basically subsidizing their growth.
It subsidizes their growth and signals that the U.S. government views Micron as critical infrastructure. That's a moat Samsung and SK Hynix just don't have here.
Okay, so you have government backing, desperate customers, 66% margins. I guess it's no surprise when we look at the chart.
The chart tells the story. In the last 12 months, the stock has risen somewhere between 239% and 254%. It's been a rocket ship.
Up over 200%.
Yep.
That usually makes me nervous. It feels like I've missed the boat, like I'd be buying the top.
And that's a totally natural reaction.
Yeah.
But you have to look at the structure of the move. It's broken out to new highs and established what we call a bullish channel. It's not just a straight vertical line.
It's stair-stepping.
It's stair-stepping higher, consolidating, then rising. And the buyers are institutions, the big funds.
So the big money is getting in.
The big money is treating this as a core AI holding. They aren't day trading it. They're accumulating. And we saw this with the New York Fab News. They announced a $100 billion investment plan.
And the market usually hates CapEx announcements.
Hates them. They want buybacks. But what did the stock do? It went up 4.5%.
Because the market knows if they build it, the buyers are already waiting.
Exactly. The market sees that spending not as a cost, but as a confirmation of decade-long demand. And here's the kicker. Despite being up 250%, the stock is still trading at under 10 times those projected 2026 earnings.
So if they actually hit $33 in earnings, today's price is incredibly cheap compared to other AI stocks.
That's the deep value play hiding in the AI sector.
Yeah.
You almost never get 300% growth trading at a single-digit multiple. NVIDIA often trades at 30 or 40 times earnings.
So the fundamentals are strong, technicals are bullish. What's the sentiment on the street? What are the analysts saying?
The mood is just very bullish. You have Mizuho raising their price target from $290 all the way to $390. Zacks has it as a rank #1, a strong buy. It's tough to find a bear right now.
But the market's always looking ahead. What are the catalysts we should be watching for in the next, say, 3 months?
Okay, a few big things on the calendar. First, Q2 earnings in March. Management has already guided for record numbers, so the bar is high, but they seem confident. Then you have the fab updates. Keep an eye on the Singapore expansion.
And on the product side of things?
The big one is the rollout of HBM4. That's the next generation. It's coming in the second quarter of 2026. It offers double the bandwidth, and because it's so hard to make, it commands a 50% price premium over today's chips.
Double the bandwidth, 50% more expensive. That's music to investors' ears. But I have to play devil's advocate here.
Please do.
What could go wrong? We talked about the super cycle, but history says memory is boom and bust, that hog cycle.
It's the biggest risk. Right now, Micron, Samsung, and SK Hynix are all spending billions to build factories. The danger is that if supply finally catches up to demand, say in 2028 when all these fabs are online, we could see a massive oversupply.
And if that happens, prices crash.
They crash hard. We've seen memory prices drop 50% in a single year during past cycles.
And what about that spending, all that CapEx?
That's the CapEx intensity risk. They're betting the farm that this demand continues. If AI demand from Google or Meta softens, what we call the demand cliff, Micron is left with very expensive empty factories.
And Samsung isn't just sitting still, right?
Samsung is the sleeping giant. They were late to HBM, which is why Micron is winning now. But they're incredibly aggressive. If they ramp up production faster than expected, or if they start a price war to gain back market share, Micron's pricing power could erode very, very quickly. Those 66% margins, gone.
So the risk is that the competition fills in that moat you talked about.
Precisely. For now, though, most analysts see those as medium-term risks, not immediate ones. The complexity of making these chips gives Micron a bit of a runway.
So weighing the super cycle against that cyclical history, what's the final verdict? How do we score this?
I'm giving this a 9 out of 10.
A 9. That is a very high score.
I think it warrants it. The thesis here is that this is a multi-year hold, think 3 to 5 years. Micron has successfully transitioned. They are not a commodity provider anymore. They are a specialized AI infrastructure play.
Right.
When you combine the sold-out supply, the U.S. government backing, and those exploding margins,
Yeah.
the supercycle argument just outweighs the cyclical risks for now.
It sounds like that transition from cyclical to secular growth is really the whole story.
It is. And my final thought is on the valuation gap. When you compare Micron to its AI peers, the valuation suggests there's still maybe 30 to 80% upside left. The market is still pricing it like a memory company, not an AI company.
30 to 80% upside, that's definitely something to think about. It's fascinating to see a company reinvent itself so successfully in the middle of such a huge tech shift.
It's a lesson in being in the right place at the right time with the right technology.
Well, that is a lot to digest, but a very compelling case. We'll be watching that Q2 earnings report in March very closely.
Absolutely.
And that's a wrap for today's deep dive into Micron. If you find our talks useful, please consider subscribing, liking, and commenting underneath. We'd love to hear your take. Do you think the supercycle is real, or is the hog cycle coming for us all? Let us know.
Thanks for listening.
See you next time.